Welcome to LeonCo and welcome to your weekly video. Welcome to LeonCo, and last week we culminated our topic for cryptocurrency and we still have this Monday left on March, so we decided to talk about one topic that one of our followers suggested on their comment pages, and it's to talk about the bear market, what it is, and what should I do when I experience a bear market. So let's jump right to it. So a bear market is when an investment, a stock investment, it could be a stock or the whole stock market, drops 20% or more from their 52-week high. What does this mean? Stocks have a 52-week high and a 52-week low. This is the range that the stock market values their stocks and their investment from their highest price in 52 weeks to their lowest price in 52 weeks. So when we say that we are entering or we are in a bear market is when that stock price falls below a 20% from that 52-week high, or it could be even bigger, the drop. So when we started to experience this, or when we fell into a bear market most recently, was on March 11, 2020. Yes, that is in the pinnacle of the COVID-19 situation in the United States, and this triggered a bear market in the stock market in the United States. So most recently, for the past few days and maybe weeks, we've been experiencing a bear market in the stock market in the United States, and most probably we've experienced a bear market throughout the whole investment world and the whole stocks globally because of this global pandemic. So what should you do, or what should we do when we face a bear market? Well, there are many ways or situations that you can handle, or you can use the bear market at your advantage. Being the first reason or the first response that most investors have, especially if they are not necessarily more experienced or they don't have a high risk tolerance, is that they resort to start selling all of those stocks that they have to try to receive that cash value again from the investment that they have had throughout their stocks. But on the contrary, from this stabilizing the stock market, this actually stimulates a bigger bear market because there are more sales of stocks, so the market will start crashing little by little. This has a domino effect when a bear market starts to flourish, because investors, most of them get scared, they call their brokers, or they even have automated brokers that when stocks or their investment reach a certain low point, they are stimulated to sell everything. So this stimulates an even bigger bear market. That this could be the thing that we are experiencing today in the stock market, and the economic that we are realizing is that most investors saw the beginning of this bear market, and instead of holding their stocks and waiting for the stocks to re-emerge and restabilize, they decided to sell all their stocks to get that cash value back, and which influenced a bigger bear market and a bigger drop in the stock market. So this is the first stimulus or reaction most investors do. The other thing that you can do is just you can wait it out. Just wait out the bear market, keep your normal investing from day to day, or however you do your investing, and just wait out this bear markets, because eventually the stock market is a big cycle. We've experienced throughout these couple of months that we've been in a high, but eventually stock markets fluctuate just like a roller coaster. We have big highs and then we have some lows, but eventually everything stabilizes. Or the third option that you have as an investor is if you have a very high risk tolerance, if you're starting investing, if you still have 10, 20, 15 years of investing still left out, a bear market is a great opportunity for you to start investing in stocks that normally wouldn't be so flexible for you in their price. Stocks that are being very high, and investment in those companies or investing in those funds weren't necessarily being very attractive or very price friendly for you. So bear markets are a great opportunity for you to start investing or diversify your portfolio in stocks and companies that normally you wouldn't have a chance in a good market to start investing in them. And another way you can start using the bear market is bear markets give you the opportunity to increase your portfolio diversity, increase the amount of stocks that you already have in the portfolio that you acquired. And this gives you a heads up for people that are in their midst of their investment plan. Bear markets could be that catalyst that ups their investment, that forwards their investment maybe 2, 3, this could be even up to 5 years depending on the amount of money they are willing to invest in the bear market, especially if it's a continuous bear market. Keep in mind that when it comes to a bear market, if the market does not necessarily stimulus in a way that we start to see a positive trend in a couple of days, bear markets could result in the start of a mini depression or a mini recession, because if the economy as a whole does not turns back up to their normality, to start getting gains, to start seeing return from the investments, this can mean that the stock market could go down continuously. So keep in mind that a bear market, just like any investment, could be a high reward but a high risk too when it comes to investment. So we wanted to share this video because it was suggested from one of our followers, and we are very excited to share with you guys all of these information. Leave us in the comment section below if there are any other topics that you would like for us to share with you guys throughout this process. Keep in mind that we are not financial professionals. Everything that we share, especially in this topic, is full of experiences that we've had and things that we have done. We by any means are not financial professionals, so take this with a grain of salt and do this by your own risk. So I hope you guys like this video. Give us a like, subscribe to our channel, hit that notification bell, stay safe, stay healthy, but always remember to have that king mentality.